Apple exploding in both directions right now. After earnings, traded all the way down to 111. Twitter getting hit as well. Much harder though, it's staying down. I guess Twitter teased everybody at the 3150 breakout today. You can't like those tails up there though. That's stuff you got to stay away from. It's showing a complete lack of conviction to be able to get through that level. Still not sure Apple's staying above this level though. We'll see. Those are two giant moves in both directions. Essentially $4 in both directions. Wow. And that is why I don't trade after hours or earnings. This stock has really no idea where it wants to go right now. Compare the indecision in this stock right now with the clear decisiveness of what Twitter is doing right now. Twitter did not, Twitter. I wonder if that's a Freudian slip. Twitter, not quitter, Twitter did not bounce back the way Apple did. IBM got hit hard today too, but that was during regular hours. All right, so Apple looks like it's gaining a little bit of footing. 116 is the level. That's the one that we've been watching on the charts for a while now. Give or take, maybe 116.50, but pretty much in that area. Next level after that is 116 to 120. Then you zoom it out a little bit. We got 120 to 125, then 125 to 130. It's been in some pretty defined ranges for most of 2015. Zoom that out a little bit. All right, so that's basically the day in Apple. A little bit awkward there to see. Let me actually take it off of after hours so we can get back to the intraday charts. So getting back to starting the recap. Obviously, my name is Pete Renzulli. You can see us here at tradingeducationblogs.com. And what we're going to do now is just start the recap and jump on in. Here's what we have going on today. Obviously, Apple still a big part of recognized with Steve Jobs. I could have put Twitter up here as well, but I just wanted to keep it about probably the bigger one. Nobody really cares about Twitter while it's down in the 20s. Assuming it's going to stay in the 20s after that earnings report. I think it's around 27 right now. So Apple earnings, IBM implodes. SPY closed above the open. Actually, so it was a positive day from the open, but a negative day from the previous close. So here's essentially what we looked at coming into today. Again, we spent a lot of time focused on the large cap stocks and how they move the market around. Some of them are high beta, some of them are not. Obviously, Microsoft not exactly high beta anymore, but that stock has been really strong for the last few days. A lot of good news out on the new Surface notebook that they have. But again, basic materials continuing to be in the dumps after they were strong for about a month. A lot of sector rotation. You got to really be on top of that, and we'll see what that looks like in today's heat map. So this is the heat map coming into today, and very similar chart yesterday, intraday, to what we got today, which was dancing on both sides of the opening price. So we got above it, below, and back above it. It's very similar this afternoon, as well as light volume. The light volume was interesting. So coming into today, this was the morning call. SPY volume was non-existent, which I want to say yesterday was probably around 65 million, which is 110 million shares less than last Thursday and about 80 million less than last Friday to give you an idea how light it was, and it was light again today. So what do you get from that? Well, look, I mean, there's two different ways you can put it. You can put it no bias or analysis to speak of due to the lack of volume. Say there was no decisions being made, there was no commitment, so you don't want to read anything to it. However, just from a pure technical analysis perspective, you can also read into it and say, well, we had momentum moves higher, and it's a light volume pause after that momentum move, which is, that's just basic technical analysis, but put a caveat in there. This is clearly a stretch since momentum, as we call it on the charts there, was only 1 day. So you had to push up and then move sideways for a couple of days in really light volume. That could be conceived technically as good technical analysis, but 1 day of momentum is not exactly momentum. You'd like to at the very least, see 2 days in a row where you get higher highs, higher lows, or lower lows, lower highs, where you get well bid or well offered. We didn't see that. Just getting basically a light push. Although now on the SPY daily, we do have, although we closed above the open, we have well offered now, which is lower lows, lower highs. So 205 level is the level we're looking for as support there. Heading into the day, retail, specifically Walmart, Kohl's, Macy's, even BBY. Best Buy is actually a confirmed downtrend. We'll take a look at that in a second. Apple and Twitter, we just discussed about the earnings. And the big signal today or pattern to have been looking at today, inside days. We had a ton of inside days today. And for those of you new to the video, inside days, you switch from trading a trend or order flow or direction to yesterday consolidated. And today we're trading a breakout. We're calling for an expansion in volatility, but we're not calling for direction. So here's end of today. And the heat map at the end of the day, you can see clearly different. The larger cap stocks, either red or very barely green, if green at all. But again, basic materials taking a hit. One of the things we've talked about quite a bit, especially if you're in the live trading room with us, this is by far, nothing even comes close to how cognizant you need to be right now of sector rotation and stock-specific plays. From day to day to day, we are not getting much follow-through other than a few select tech stocks like Intel, I guess you can call G, not really a tech stock, it's more conglomerate, but Intel, Microsoft, some of those stocks have been, SanDisk and WDC to the downside, but to the upside, Juniper and those kind of stocks, where other than very select pockets, you've really had to go day to day to figure out what we want to do. I mean, let's just look at that again. Look at the heat map there. You got pockets of green, basic materials red. Then you go into today's, and again, not much clarity other than this one sector. And healthcare, pharmaceuticals have been good. Actually, AMGN 2 days in a row is actually going to be a very good one for us to review right now, because AMGN was phenomenal to have in your tracking journal from 1 day to the next, and absolutely awesome perspective of watching a stock and saying, I'm eliminating one side of the market. I am only looking for spots to get long this side. And when you cut off one side of the market, it makes it much easier to say that's confirmation for what I'm looking for. And I'll show you what that looks like on the chart in a minute. So again, SPY, as I said, very similar to yesterday. Kind of, here's the open line again, today's opening price. We're dancing above and below that. And you can see we're technically well offered now on the SPY, which basically means lower lows, lower highs. Then you could also, as we had said this morning, you can call that a pause in this momentum move higher. But again, basically 1 day plus a gap, that would be the momentum you'd be talking about. Not really what you'd like to see, where you'd like to see at least a few days in a row. But pretend these are daily candles. You'd like to see a little bit of that. This is a 10-minute chart, but we're not getting that right now. So it's kind of, I wouldn't call it weak, but certainly not something you could really hang your hat on, other than the fact that we've been moving up. So some of the long ideas, the problem with some of the long ideas today is they were overbought again, or at or near resistance. So you had to really be picky about which trades you took. Here's what I meant about the inside days. Just a much, much bigger list today to be looking at, almost double or triple yesterday's list, as a matter of fact. And you can see not really a ton of stocks on the short side today, although we were focusing pretty heavy on Lulu, IBM. Tesla was kind of neutral, even though it was on a short-term bear flag. Really, we're looking at HOG to roll over today. FEYE actually did. WMB actually in the middle of the day really consolidated tightly. I think it was between 10:30 and 11. Didn't roll down as hard as we wanted it to, but AMGN long and IBM short were pretty much the better trades for the day. Apple still trading up here, just to give you a quick idea. But if we go over to the SPY again, This is what we're talking about here, this little flag. Not really the greatest thing in the world to lean on. We're just getting either spurts or dojis. And to us, the dojis mean indecision, really nothing to do there. You don't want to trade when there's not that much obvious. You really need to be trading with conviction, especially in this tape. And that means you got to really, really be picking which stocks you want to dig into. So we're talking about HOG as one of the better short sales we're looking at today, and you could clearly see why. Gap down 3 days now. Yesterday, it did not roll over and actually gave us an inside day, so one of the stocks in that list that we're looking at to short. And coming out of the gate today, we thought when we got into this area here, we're going to be pretty comfortable looking to short it. Again, just didn't roll over and just kept dancing up above and below the opening price. No big deal. You take your loss if you put the short on. You lick your wounds and you go to the next trade. But IBM was easily the trade of the day today. You can see why here. Gap down, basically a bounce after a gap down. Kramer somewhere in here, I think it was the first day or the second day, said it's got a lot more downside. And if we take a look at the longer term chart here, you can get an idea of where the next levels are. They're really, actually, let me go out to the weekly, get a much better view here. You can see we just got through this level. This is the next level. So it's 120, I want to say 123, 121.50 is actually the next support level in IBM. So we were looking to lean on that a little bit today. And you can clearly see, let me just zoom this out here. From here on over is the daily. So once the intraday chart. Here's the opening price, below the opening price, pretty much the entire day. Broke this support that we're looking for over here, and then gave us some really clean moves to the downside. Now, the other one that I want to mention was AMGN, which I'm going to actually first show you yesterday. Here's yesterday. We spent a lot of time talking about this stock. Setting up perfectly at the 2-day high, flagging for 20 minutes before it had that bounce. We talked about from the low to the high in this area was the average true range, and how the average true range, generally speaking, will be a good profit target if there isn't one on the chart. As you can see here on the daily, not very, very clear. And this is really the point that I want to make. If you're coming into the day saying, I am only looking for longs in AMGN, I'm not going to do the dance back and forth, back and forth, back and forth, which this one could have been a pretty good entry long here. You can see we're basically pausing at the 2-day high, but it didn't trigger because we didn't take out the highs. But here's the point that I want to make. You're going into the day saying long. I only want to be long. Good recent momentum, especially compared to the rest of the market. You're eliminating this garbage when it gets below the opening price. You're not looking to short sell, and then you're actually looking for spots to get long. Now, no matter what signal you like to use, whether it's a flag, inside candle, breakout, it doesn't make a difference. There are plenty of entries on the way up. Or you could drop down, find a flag over here. You could trade the breakout here of new highs, and even then you still had $2. So the big thing I want you to take out of this is be definitive, be stock specific, be sector specific. If you're lucky, have multiple stocks in the same sector. If more of them are doing the same thing, you can lean in a little bit more just because the market's not doing that right now. As well as if you do get those individual stocks like this, put them in your tracking journal from day to day, and you can see they're clearly beautiful, beautiful push off the lows. Is that luck? No, that means you're prepared. Be ballsy. Get out there, have your game plan, and be ready. And if your numbers and patterns start to unfold, don't hesitate. Make money because you're prepared. If the trades don't work out, you take the loss like an adult, move on, realize it's trading is a business, and put the next trade on. Allow the probabilities to play themselves out. Some phenomenal activity in this market right now if you're prepared. If you're leaning too much on the market, you're probably going crazy right now because the market is not really giving us a clean, good intraday bias. The market internals are showing that. The spiders are showing that trading above and below the opening price a decent amount during the day. But if you're ready for stuff like this, and as I said, if you're looking at IBM, we also we're looking for Walmart today to roll over. Did in the morning pretty well. Some of the other retail did not roll over and stay down like we expected. You could clearly see here why we like Macy's short. Yesterday was a beautiful trend down. Some of them work out, some of them don't. You know what? The ones that do, again, going back to Boeing out of the gate today, the ones that do, be aggressive. Have the moxie to say, I know what I'm looking at, and if certain stuff happens during the day, pull the trigger and do not hesitate. If you do the work, trust yourself. The last part is just trusting yourself to manage the trade, take losses, and hold the good ones a little bit longer. Holding the good ones a little bit longer, that works out a little better when you have a bigger picture structure to say all these things are lined up. I can hold it a little longer. If not, if that stuff's not lining up, you say, you know what, next flag, next pause, I'm going to exit, as opposed to looking for adding position because you think a little bit more of a move is going to be out there. If you slow down and the market's tough or you're at a resistance level in a tough tape like we're in right now, especially a light volume one. If I go back to the spiders one more time, I think it was like 70 million today. Nope, actually a little more than that, 144 million. So actually better volume today. Oh, actually, no, it's not. I'm sorry. That's on the weekly. Talking so fast, I can't even get a 75 million. So again, very light volume. So 140 is actually for 2 days. So again, lighter volume in the market, stock specific. If it starts to follow through and you have room to go, you can hang on to it. If it's coming up to a resistance level, this is not the tape to expect it to break through right now in a big way, unless you have really clean daily charts. So let's call it a day. It is Tuesday night. October 27th, almost Halloween already, which is scary. And Apple just came out. Twitter got hit. Apple bouncing around, looks a little positive right now. Get in there. Going to have some more opportunity tomorrow. Get ready, and we'll see you in the live trading room tomorrow. This is Pete Renzulli, tradingeducationblogs.com, and I can't even speak anymore. It's that point in the day. Have an awesome day, everybody.